Tune in now for the latest market update.
Market falls like a knife.
The weak hands are out, the strong hands own it.
If you think trading is easy, that's the fastest way you will actually get wrecked.
With your hosts, Jackson and Giovanni. This is Cointelegraph's Crypto Markets Live.
CHAINLINK is a suite of products and services that enables customers to have a one-stop shop experience when engaging with crypto. CHAINLINK acts as an intermediary between exchanges and retail users, offering over 160 cryptocurrencies that can be effortlessly swapped within 10 minutes on mobile or desktop. In 2020, CHAINLINK branched out to accommodate the needs of traders with CHAINLINK Pro. Pro is a fully compliant, regulated, and easy-to-use platform that enables retail buying and selling of digital tokens and coins. Piggybacking the great support system found within CHAINLINK, CHAINLINK Pro will provide simplicity, effective pricing, fast execution, and 24/7 live support.
Hi everyone, guys. Welcome back to our Crypto Market Live show. I'm your host, Giovanni, and today I have the pleasure to be joined by Michaël van de Poppe and Scott Melker, two veteran traders that you probably all know very well. So today we're going to discuss Bitcoin's correlation with traditional assets, but also we are going to explore altcoins and the explosive growth of decentralized finance. So before we start, I want to remind our audience to write questions in the chat during the show. We're going to pick the most interesting ones. As always, we're going to ask them to our guests. Also, don't forget to like and subscribe to our channel. And keep tuned for the following episodes of Crypto Markets Live. So welcome, guys. Nice to see you here.
Thank you. Thank you.
So let's get started. As usual, I would like you to give us your perspective on the Bitcoin price movements and the outlook for the next future. I guess, Scott, you can start.
Sure. Do you want me to share my screen and take a look at the chart?
Yes, please.
Sure. All right. What's up, everybody? So I guess it's best in this case to zoom out. I like always starting on the monthly chart when I'm looking at Bitcoin. You can see some key levels here. This is not a key monthly level. That's a weekly level. But what's interesting to me about what's happened of late is that we have this area right around 92.43 where this really was the launch pad for the last monthly candle. And I've been talking about this level for a long time because, as you can see, effectively every single candle except this one for the last over a year, 13 months, interacted in some meaningful way with that level. You know, we've got like these touches right here. These candles both basically top there. These candles both basically top there. This wick there, and then we consolidated around it and jumped off. So to me, that was the clear break sort of in market structure. And even more importantly, obviously, that it jumped from there and crossed, this 10,540, in this case, 540.49 level, which was a macro, if you were drawing a line here or whatever, this was the macro higher high that broke any really bearish structure or argument since the, 14,000 top. So, and even more interesting is, that the monthly closed above there for July, and then we have August came back and touched it almost to the dollar as support. So to me, bullish trend, no question, hard to argue for me anything particularly bearish. So I think that we're in a super dip buying mode. I mean, we can, zoom into other time frames. This was what I was trading on the weekly, so I wasn't really taking many Bitcoin trades here. I was basically going to short if it broke below this blue and long when it went above, which is what I did. But I'm currently not in any trades there. And then I guess, we can zoom into a lower time frame. This support line is sort of a meme at this point, to be honest. I haven't dug too deep into this chart. But you can see basically that it's getting really tight in here. If you're looking super locally, this is the trend you want to see broken to continue up. We have this line that, held here, broke down, clearly rejected, and now we're struggling to keep it as support. So I see that as a key local level. If that holds and we break here, then we go up. Otherwise, maybe, we come down into like 11,000, 10.8 or something, and then I would expect us to continue further up. Either way, no matter what, no matter how low we go at this point, unless it's a really major break in market structure, I see this as extremely bullish movement and expect for us to be, testing those 14K levels and above.
Mm-hmm. Michael, I think that I read an article written by you lately on our website, which seemed to describe similar views. Is it correct?
Yeah, I can share my screen as well if I want to explain this. Give me a second. Then I can start sharing my screen. Yeah, wonderful. So yeah, I've got some squigglies. If the people know that I'm always making squigglies and I'm always a bit lazy of removing them. But what you can see essentially here is that for me, the crucial area is, can this please go? Thank you. Is holding the 11.1 to 11.3K zone. As long as we hold the construction there, essentially the market is into bull territory for me. If we do lose 11.1 to 11.3, I think we can nosedive for a little while, in which we just get a range construction like we have been doing since the halving. What is the essential resistance we have to clear through? That's basically the level we have been testing, and that's the 11A to 12K zone. And I generally do believe that this 11A to 12K zone is the final hurdle before the expansion of the bull market and before the whole craziness starts again. So it wouldn't really matter if we are going to range for a little while and just get compression and strength to break out of it. But it's all hanging towards holding that 11.1, 11.3 zone. And if we zoom in on a 4-hour time frame, or even smaller on a 1-hour time frame, we can see that right now, short term, we are in a downwards trending motion, I would say, in which if we want to continue making movements upwards, we have to crack this 11.7 level. If we do crack this, I think we're going to break through 12K, and we might be expanding upwards already. And you can also see that once we break below 11.1, I think we're going to see the 10K zone. So it's kind of easy, but it's also a notion in which we can just range for 2 weeks before we make a move. But overall, I think it's by the dip market right now.
Mm-hmm. Thanks, Michael. And I also wanted to point the audience attention to the location where you're sitting. So as far as I understand, that's the Dutch Stock Exchange.
Yes, I'm currently doing this podcast from the office. So it's the old Dutch Stock Exchange, which used to be the one where everybody was trading, and right now it's just a fancy office building surrounded with like 200 traders on this floor. So it's a really cool place to be.
I'm in the official North Central Florida headquarters of the New York Stock Exchange. No, I'm just kidding. It's my house.
I got that it was a joke. Yeah. Okay, so moving on to the following topic, I see that the audience has already some questions, but they're mainly regarding alts and DeFi. So I guess we can talk about it a little bit later. First, I wanted to explore the topic of the correlation between Bitcoin and the traditional assets. So not long ago, we had on our show Ari Paul, the CEO at Block Tower Capital, who said that his fund has been paying more closer attention to traditional markets in the latest few months after the COVID-19 crisis started in March, because Bitcoin started showing a higher correlation with these traditional assets than ever before. So traditionally, Bitcoin was usually considered an uncorrelated asset, at least that's how it was dubbed. But later it has been showing this higher correlation. So how this higher correlation impacted your trading activity, if in any way, Scott?
I mean, I think people generally by now know where I somewhat stand on correlation. I think that, yes, they've been similar at times. And I think that, of late, it's been less so. I've always argued that if you want to look at any sort of correlation, and this goes for basically every market, it's going to be inverse to the dollar. I mean, you can pull up a Bitcoin chart over a dollar chart. I have one. If you want to look at it later, it's clear as day. I mean, every peak and valley is opposing. So, I think that dollar weakness is largely, if you want to trade correlation, what you would be looking at. That said, like, you're asking how it affects my trading activities, and the answer is it doesn't. Because if I think that the dollar is going to go down, I'm seeing the same thing on a Bitcoin chart that it's likely to go up, right? So, like, I don't think you need the information related to correlation. Looking at a stock market, an SPX chart, or any of these things, they're happening in real time at the same time. So it doesn't provide me any advanced information about what Bitcoin might do. If they're truly correlated, it's happening at the same time. So might as well throw them all in the trash and just look at the Bitcoin chart. That's how I feel about it. And, I haven't been really proven otherwise personally as far as my strategy yet.
Right, but you can at least identify a macro trend, right? I mean, I understand that that's not helping you in like the daily trading activity, but maybe for some more long-term kind of investment or trade, that helps some kind of identifying a major trend, no?
Sure, I'll give you that, but I don't use it. I mean, I really still believe that Bitcoin is the most, tradable asset technically of any asset that's basically ever existed. I can look at a Bitcoin chart, I can trade it, I can be profitable. So why go through the headache of adding in more noise and information that I personally don't think I need?
What's your take, Michael, about the correlation? Do you also think it's not relevant for your trading activity?
Well, I think there is what you just said is that during day trading and swing trading, you're basically just cutting all the noise and not focusing on all this stuff because it's all about levels essentially. But if you're going to do like long-term investing and swing trading, then it is making an impact. So for instance, if the dollar is weakening, you're better off holding gold, silver and Bitcoin or any other inverse correlated asset. So I think that in long-term investing and swing trading, it's indeed a very important asset or indicator to use. But like for day trading, why would I use a weaker dollar? I mean, I just have my levels, I use my levels and everything that even the crash of Gem today, the altcoin, some people were pointing at the drop of Bitcoin that's influenced by a small altcoin that just had some stuff going on. Like, just cut all this noise and just trade the levels. But if you go to long-term investing, in which I use it for my portfolio, which I want to use for the coming 10 years and don't want to look at it every day, then indeed I look at measures like what is the value of gold right now compared to the S&P, how strong is the dollar, and then you have to use it to deploy like a very low risk asset portfolio.
Right.
Right. So talking about your investments, so maybe not. Let's not talk about the daily trade you do, but as this higher correlation that is happening in Bitcoin have somehow make your long-term investment easy to predict, because since before Bitcoin was like was less correlated, right? It was, I guess, more difficult to predict its behavior. No.
Well,
go ahead.
If you go back in history, and to be honest, the whole correlation subject came up. Like our last podcast with Scott was like 4 months ago. We had the exact same subject. So funny that we're discussing it again. But this subject came up during the crash of the coronavirus in March. Then all of a sudden, everything was correlated to each other. And since then, everybody's discussing the correlation. But if you go back in history, the past 6 years before that, you can also spot these correlations, as markets are always correlated to each other. But like in this crash, it was correlated because of the panic occurring across the markets. And now it's correlated because the dollar is weakening. So just understanding which correlation is going on could indeed help you. But these correlations are always there. It's nothing new.
Right. And you have to, even if you look at a dollar chart or make assumptions on the dollar, I mean, can you confidently tell me that the dollar will be down 10 years from now? So you want to make an investing decision in Bitcoin based on that? No. Right. So I just don't, I get it. I get that people use it. And I agree with you. But for me, I don't think anything, maybe I should say that nothing has fundamentally changed in markets in general that I think would change the view of any long-term investor, except maybe to up your, assets like gold, Bitcoin, and silver some. So yes, as an investor, I'm willing to have more money in crypto than I would have 6 months ago, and I do. So but that's not because of dollar weakness. That's because the world is a complete disaster, and I think that what's happening is criminal, and I want to opt out of that system. But it's not because of dollar weakness per se.
Well, if you go back in history and you go even further down the road towards the dot-com bubble and the collapse of the dot-com bubble, since the years after, the euro dollar went from like 0.80 to 160 in like 10 years since, And if you go back to the gold and silver charts, they had their bull run in these 10 years as well. So this correlation subject from right now is new for many people, as they are new to investing, as they found crypto. But if you go back in history, it's always been there.
Gold has always been viewed as a hedge against fiat currency. I mean, or vice versa. So yes, there's no question that correlation can be used. I just don't see a reason to use it with Bitcoin.
That's interesting. So, I mean, I guess that now at least maybe more people are aware of this correlation issue, and they are identifying more clearly Bitcoin as a possible hedge against the depreciation of the dollar and so on. And that becomes a sort of self-fulfilling prophecy at the end of the day. Maybe.
I think it's also about people are more understanding how corrupt this financial system is through understanding crypto and through understanding what they can do without this system. And that's why also Bitcoin is going up, and also the overall demand for crypto and other assets is increasing since Corona. I think that's also a reason with it. Yeah.
I think for the first time ever, your average person, not every average person, but some people are looking at what's happening and going, common sense just tells me that this is not sustainable, right? You can't print money forever. You can't, have your government buying corporate bonds and doing all this. I mean, it's criminal, you know what I mean? And it makes no sense. So even the average person now might say, hey, maybe there's something else here, and that would cause a few people to consider it. But yet again, that's not an issue of correlation. That's just common sense. Like what happens if this system collapses? I need to have something else. But that's not something you look at on a chart or you determine through the mathematical formula of correlation per se.
Yeah. And if something drops down, for instance, like in the worst case scenario, the US dollar is going to collapse. But if the US dollar is going to collapse, it's going to be the last currency that's going to collapse.
It's over.
But if it happens in the worst case scenario, there's always something else going up. Always.
Yeah, we will be very wealthy in the zombie apocalypse, So
yeah, well, you can't spend it, but you have got money.
All right, we have a question from the audience. Kartik asks, how many trades you do a month? Scott, you want to go first?
It completely varies, to be honest. Like it depends on what's going on in my life, what's going on in my headspace, how much time I have otherwise. But I mean, I've taken very, very few Bitcoin trades in the last few months. Like I said, it was sort of ranging and not that interesting. The last week and a half, I haven't traded very much because I had basically established altcoin positions in the last few weeks or months. And I'm just playing, whack-a-mole, watching them go up, sell, wait for another one to go up and sell. And it's sort of been the role. I think that a lot of people as well, but I mean, I've been calling alt season for almost a year. So people have been calling me nuts, but I've been trading alts like crazy for basically 11 months shamelessly. So a lot of those, well-established positions that I waited on have somewhat started to pop. So, I mean, I will, when it's hot like this, I'm trading alts a lot more, but in general, I have not been trading, so much right now.
Yeah, and we're going to talk about how to trade alt season in a bit. Michael, do you want to answer how many trades do you do a month, if you have like a specific amount?
No, I don't. Right now, I do actually the same as Scott is doing, as essentially everything is waking up. So I don't want to be that guy who's selling his altcoins for 20% profits and then see it go like ballistic to 500% profits, which essentially has happened a few times already. So I've skipped that part. So I'm just holding right now. And if something goes very fast up, I just hop to the next one, which essentially looks the same.
Yep.
So it's a very easy market right now. And you can just make a dartboard, put like 40 altcoins on it, throw a dart, and you're still profitable.
Yep.
Which is, great for us, right?
Free money.
Okay, so we have another related question. So related question to the topic we were talking before. Yugen I asks, would you agree that the traditional market is like a 90-year-old dying man and the cryptocurrency world is a newborn baby? That future remains to be seen. I'm not sure I understand this final part, but
I understand what he's saying. He's saying that I'm assuming he's saying, it's a baby, so you don't know what the future holds for it. Sure, I agree with that, but I don't think that the legacy market is a 90-year-old dying man. And if it is, that 90-year-old dying man still has the strength to kill that baby. So I wouldn't get so excited. I mean, the markets aren't going anywhere. You know what I mean? I think that the dollar could drop. We've seen it before. There's a lot of things that can happen, but no, I don't think we're seeing like a global collapse of all systems that have been in place forever.
But at the same time, you were mentioning about these great
I think
convulsions that are happening in the market. So
right, I think that people are looking for other answers and want exposure to those other things. But I mean, the stock market's like $1 off its high. Like the SPY is like $1 off its high right now, all-time high. It's hard to describe something that just dropped 30-40% and came all the way back as a dying 90-year-old man, in my opinion. Unless he's got a lot of Viagra.
So maybe too much of a stretched stretch metaphor. Let's move on to the following question. So I want to go a little bit deeper into this correlation issue. So talking about the correlation between gold and Bitcoin, we saw that it reached an all-time highs a few weeks ago. So do you think that this correlation is here to stay? And how much of that correlation is dependent on the performance of the dollar? Scott, want to start?
I think it's about the dollar. Yeah, I think that it's kind of the same conversation that we just had, which is that if people are starting to really view Bitcoin as digital gold, as a safe haven asset, all the sort of narratives that we had before, then you would expect it to move somewhat similar to gold. I haven't checked the actual mathematical correlation between the two, so I can't speak to it. What is it?
It just popped. I don't know. It's like the highest point in a year. I just saw it.
Yeah, but I'm saying, popping up, it's all relative, right? So if it pops up to 0.4, it's still not a correlated asset. If it's 0.9, then we got something definitely to talk about. Yeah.
Like the past year, the euro dollar has been a flatliner. So right now it's starting to show volatility because the dollar is just showing weakness. And then you essentially want to see Bitcoin becoming one of the potential safe havens and move with gold and silver. That's what
we want. Absolutely right. That's the narrative. And then you just want it to outpace it.
Well, it will because of the size of the markets, right?
Yeah.
So yeah, I think it's also about the dollar, but the whole markets are all about the dollar. So essentially, if the dollar is weakening, of course. I mean, it's not. Yeah, it's also about Bitcoin and the future of the technology, but essentially, it's about the dollar. If the dollar is getting weaker and the whole people in the United States are just killing themselves, of course, the whole currency goes down.
Yeah, and also, I mean, let's keep in mind that our government wants the dollar to weaken. I think that a lot of people hear, but I think a lot of people hear weakening dollar and they think that means weakening United States. And that's, that's not necessarily the case. If you want the stock market to go up, you want the dollar to go down. And we happen to be in a situation where a lot of people have a lot of vested interest in the stock market rising.
Like, what they are trying to achieve is that they're essentially avoiding deflation, because deflation and such a high debt level and a potential increase in yield, which we'll be discussing in a few minutes, is just disruptive for the system itself. So they are just pushing with free money so they can keep the inflation going. And when they can keep the inflation going, the debt will itself also be lowering in value over time, just as money is. So what they are doing is it can become a new 1970s in which we have like inflation levels of 14-15%, which can also push the stock markets to even higher levels, like Apple to 4 trillion. Yeah, it can still happen.
Yeah, sure.
Because the dollar
is manipulated.
Value.
Yeah, it's manipulated.
Yes.
So regarding this, David J asked, many have said to use Bitcoin as a hedge. What percent would you recommend using BTC as a hedge? So what percentage of BTC should someone have as a hedge in case this scenario plays out, like this 70s like scenario you were talking about?
Like one well-known Dutch investor and analyst is using the percentages of having 25% in cash, and which is like 10% crypto right now, 25% in stocks, 25% real estate, and 25% in commodities, which is gold and silver, which is essentially a hedge for all market environments. So if you have that and you rebalance over time, you're always doing well, and you have got a almost risk-free approach. I would, as I'm young, I would increase my positions in commodities and Bitcoin as I can take the risk. But the older you get, the lower your risks you should have, in my opinion.
Who are you calling old, man?
Well, yes, I am. I see some gray hair already on the
Oh my gosh, my hairline is like, I've lost 3 inches in COVID. It's crazy. A lot of gray. Over here, there it is.
Okay, so I guess we have like 2 generational approaches here. Maybe Scott has his own generation approach regarding this portfolio construction issue.
I think the answer for portfolio construction is extremely individual, and there's no one size fits all approach. Like he said, even just talking about age, but then also your financial situation. Listen, if you have like $100 million, you could throw 70 million of it into Bitcoin. It could go to zero and you have $30 million. So whatever, right? But if it's your only $1,000 that you have and you lose, 700 of your $1,000, then it's a very different situation. So I think it's a very individual thing. I mean, at the very basic level, I think 1 to 5% literally every person on the planet should have, because of the disproportionate chance of gain. And that's not because I think that 1 or 5% will necessarily go up. It just means that if things actually go bad, as Mark Yusko was on my podcast once, and he said he called Bitcoin schmuck insurance, and he kind of said the same thing. He's like, if everything collapses because these people are so irresponsible and crazy, then yeah, your 1% could do 100x while the other 99% goes down and could cover all of your losses. So the disproportionate chance of gain is huge. For me, I always kept it around 10%, but that has increased dramatically over the past 6 months to a year, just because I've done well in this market and I have not as aggressively rebalanced. But at this point, because of what's happened, I feel comfortable certainly like 20% or above. Mm-hmm. Which for someone who's 43 with kids and stuff is probably at the very highest level of risk tolerance for most people.
Right, but you are an experienced trader, so you know what you're doing. So moving on to the following question, I want to ask you a curiosity, because you were talking about the depreciation of the dollar. What about the dollar-backed stablecoins? So there are a lot of stablecoins which are backed by dollar. And in this situation where the dollar is facing the threat of depreciation, inflation, so will those stablecoin remain appealing for investors, even in a scenario where the dollar is losing its value, like dollar-backed stablecoins? Michael?
Well, essentially, to me, dollar-backed stablecoins are just the same as the dollar itself. It's just a dollar on a cryptocurrency blockchain. So it's just a middle step from going to the dollar to crypto. So I don't like them. I don't want to have them. Just to transfer money, it's easier. And that's about it. If the dollar is going to lose value, the dollar-backed stablecoins are going to lose value as well.
Yeah.
So you'd rather just have different currencies, which can also be like Norwegian krona backed currencies. Yeah, I mean, you just don't want to have the dollar. That's about it.
Right. I agree with that generally. I definitely think, I don't think that, a dollar weakening just weakens like you said, it's 1-to-1. But that said, with the DeFi craze and the ability to earn yield on stable coins that you can't earn on dollars, to me is very appealing. So I do have a large chunk of what I consider my cash in stable coins earning, 8 to 9 to 10% annually, because my bank account gets precisely 0 or like 0.01%. So I'd rather
negative even.
Yeah, right. So if I can sit in USDC on a BlockFi or a Celsius or one of these, more trusted platforms, and my dollars, even though they're not dollars, are getting 8.5%, that's going to, put it this way, a 9% yield is going to more than outweigh the effects of a dollar drop. So.
Mm-hmm. Michael, you haven't considered this aspect of like earning yields on your stable coins?
Well, I've been looking more into staking recently, which is a little bit different than that. But like, I still have to add this passive income stuff, and I didn't focus on it as I've got some other stuff going on. So I just can't really answer that question, to be honest.
Yeah,
I'm really sorry.
It's okay. We forgive you.
We have another question from David J. So regarding investment strategies, if you have 50K and you want to spread it around, how would you approach splitting in percentage, and how would you approach high dollars versus low dollars coins? Not sure I understand actually this question, but I guess
There's probably means large cap and small cap, right? Like how much would you put in like riskier alts or go ahead, Mike.
Yeah, it's funny that he's saying like high dollar and low dollar, which kind of reminds me of 2017 buying Ripple at like 4 cents because it's a low dollar crypto.
Yeah, you don't have to buy a whole Bitcoin.
But yeah, this is just a question it's really hard to answer on, and we get them like so many times. I get them many times in my DMs. People asking me, I've got like 5K to invest. I want to marry. Which coin do I have to buy? We are not we are experts on trading, but we don't know shit about where it's going. So I just don't feel great to answer these type of questions unless it's my own view, you know?
I can tell you if it was me and I had only 50 grand, I would put it in a bank and keep it as an emergency fund in case I lost my job, and probably wouldn't invest it in anything. So
yeah, but it's also depending if it's 50K.
Right. It could be if it could be 50K extra, or it could be the only 50K you have in the world. You know what I mean? So like I said, this always comes back to a personal decision, which is why, as he just said, nobody can act as your financial advisor and tell you what to do. Unless of course they're your financial advisor and you pay them to tell you what to do.
And actually, that reminds me of something I read on your blog, Scott, because you were saying that a trader doesn't know where the market is going, and therefore cannot really recommend this kind of stuff to people. But the trader knows how to react to anything that the market is possibly doing. So the point is not knowing where the market is going. The point is being able to react to any possible scenarios.
It's being able to react and just knowing how to plan your loss. You know, I wrote about this today actually in my newsletter, but the idea is you should never be like planning for the Lambo you're going to buy when you 100x or all the huge things that are going to happen with your money. The number one rule of risk management is to protect your capital, right? So everything you do should be a thought about protecting your capital and losing the least possible. So as a trader, like you're worried about a stop loss. That's different than someone with 50 grand trying to decide to do what to do with their life savings. But yes, I mean, I view analysis and any predictions or any of those things, nobody has a crystal ball, and all of us are just trying to justify a reason to lose as little as possible when we're wrong. I really think that's the answer.
Well, yeah, I guess, I mean, if it's really struggling for, like, for instance, a day trader or a swing trader to have a long-term macro view on something, STIs, and the way a day trader is approaching the charts is just so different than someone doing it on a fundamental point of view. So if you're asking me as a trader or Scott as a trader something about like what's going to happen in the next 10 years because of this and that, we are going to answer in a completely different way than someone who's just analyzing macroeconomic data. So that's also something to keep in mind.
Mm-hmm. So moving on to the next question, I want to discuss a little bit correlation with the stock market. So Bitcoin and the stock market. We saw that after the crash in March, stocks and Bitcoins have been rising up quite in similar ways. So there was some sort of correlation. Do you see this correlation continuing today? And if so, is that as strong as the correlation between Bitcoin and gold? Michael?
Well, I guess it's coming back down to the dollar. I mean, if the dollar is losing value, everything is rising. But stock markets, I guess, are a little bit different than gold and silver in a way that companies can go down if the economy is going to fall. Like gold and silver could be safe haven. Stock markets can go down if a company is failing or if something goes background, and gold and silver won't go down. So, I mean, I think it's the same answer as the previous question, but a little bit twisted as the stock markets has a different variable added to it regarding the bankruptcy of companies.
Mm-hmm.
Yeah, but in 2020, when a company goes bankrupt, it pumps 6x on Robinhood. So the best thing that can happen to a company in the United States is actually bankruptcy, it would seem, based on the way that stocks react. Listen, the stock market is a scam. It's manipulated. It's fake. everything you're seeing is the government buying, right? So I don't see the correlation. Yes, I think there's general movements again, but I think that there's going to be a time in the not so distant future when we're not talking about this at all again. When Bitcoin is, sitting above its previous all-time high, and the stock market has not done the same relative gains. I mean, if you mean they both kind of go up at the same time and kind of go down at the same time, sure. But that doesn't mean that the gain is proportionate or that you'd be better off, sitting in an ETF or index fund than Bitcoin.
Well, fun story is if you want to trade in stock markets or legacy markets and you start to trade on your own, or you want to invest in a fund, 95% of the funds and people are worse than an index.
Yep.
An index
Absolutely.
is always better than a fund. Regarding, okay, for like 1 year, a fund can outtrade the equity markets, but over time, the index is always better than, or almost always better than you and I.
Yeah, bottom line is people don't know anything. Even the paid people, whatever, everybody's guessing.
Yep.
Markets go up. So put your money in them and wait a really long time and you'll be rich.
Or listen to Dave Portnoy.
Yeah, you buy some Hertz. When it goes bankrupt, you'll be a millionaire.
So I want to remind our audience that if you have any questions, absolutely any questions regarding this topic, just write it down in the chat. We're going to pick the most interesting ones and we're going to ask Scott and Michael about it. I want to actually continue this topic regarding stocks. So you said that right now, right now Bitcoin has been showing some sort of correlation with stocks. But let's say, and also you, Scott, you said that the market is manipulated, that everything depends on the willingness of the US government to prop up the economy, even if companies are going bankrupt and so forth. But some analysts are concerned that the stock market rally is not sustainable and there could be a reversal. So some people think that this possible reversal could also result in a reversal of Bitcoin. So do you think that in case of a stock market reversal, Bitcoin will also go down? Scott?
I'm not too worried about it. I mean, I've been thinking the stock market would reverse for like 4 years, so I might not be the right person to ask, and maybe that's all that we got. And rationally it should have, but like I said, it's recovered. The stock market is all the way back, right? So I was shorting it aggressively in March. I was shorting it aggressively in April, and then my shorts stopped working, and I stopped shorting the market, even though I thought it was going to go down. As a trader, I was clearly didn't want to be off sides. I didn't want to revenge trade it, and the market kept ripping, and I was on the right side of it after that. But I think Bitcoin is. I just don't. I mean, I don't care about stocks with regard to Bitcoin. I just don't. I don't really care. This doesn't matter to me. I'll trade Bitcoin based on the Bitcoin chart. I'll make my decisions accordingly. Yes, if the entire global market dumps again, we'll probably see at least a temporary drop in Bitcoin. I don't like if everything goes like it did in March again. I don't see Bitcoin going to 70,000 while the stock market loses 50% of its value or anything crazy like that. But I do think that they will generally return to their lack of correlation that they've had for 10 years.
Mm-hmm. Michael, do you have any other opinion about the correlation between Bitcoin and stocks and the possibility of a reversal of stocks, which could lead to like a drop of Bitcoin?
Well, I think it's a really hard subject to answer. I mean, there are so many different opinions, and they can all be true. About stock markets, I do believe that we are inside a massive bubble, and when it starts to turn around, probably won't come back until we are turning 80, or at least I'm turning 80. I think we are just in a massive bubble, and in short term, if it starts to reverse, yes, of course, almost all assets will be burned as people will be rushing towards cash or any currency to just have money to cover their losses, which we have seen in March. But I think what we should be watching is whether, for instance, the yield is going up. We're going to discuss that in a little bit. If the yield is going up, people start to lose their faith in the US dollar itself. And if you start to see that, then probably we can see Bitcoin, gold, and silver do really well in the years after the panic, while stock markets are just bottoming out or just not doing anything at all. Just like we've seen in Japan. I'm really comparing the current bubble to what we've seen in Japan in the 90s, in the beginning of the 90s, in which the market just crashed. And since then, it doesn't come back up until that level at all anymore, as it's just stuck in deflation.
Mm-hmm. We have a question from the audience. So Kartik asks, how do you deal with short-term capital gains tax? If you buy sell on the spot, one must pay huge short-term capital gains, or unless you do that in the retirement account. Scott?
There's your answer. So there's two ways. First of all, if you're paying short-term capital gains, it means you made money. So screw it. You pay your taxes, right? The answer is I pay my taxes, and it sucks, but I pay my taxes. But to the latter, if you're talking about your retirement account, because I've been saving for retirement for so long, and I have an account for both myself and my wife, I take extreme liberties with my retirement account. I don't do what most people do in their IRAs, which is, invest slowly. Like in my IRA, I'll take half the money and I'll trade it aggressively, and it's completely tax-free because the IRA vehicle allows you to defer taxes or not pay taxes until you're much older. So each trade doesn't have any capital gains. And actually, there's a company in the United States that has just launched a self-directed IRA. They're called Kingdom Trust. A self-directed IRA, which means that because a traditional IRA or 401k, you can only invest in legacy assets. For anyone who doesn't know that, you're very restricted as to what you're allowed to put in there and get the
bullshit. To be honest.
Okay, so check this out. It's the biggest bullshit in the world. Biggest bullshit in the world. They tell you what you can and can't invest in. But through a self-directed IRA, you can detach from that and you can literally put anything in your retirement account: gold, silver, Bitcoin, cattle, fishing rights, fire trucks, art. It doesn't matter. You can invest in all of it with the same tax-deferred status. So that's what I'm doing. So now I can very aggressively trade Bitcoin within my IRA with no tax implications at all. And it's awesome.
Or you can move to the Netherlands where you don't have this trouble and you just pay 1.5% every year on your total wealth.
It's insane. I would
that's
go
about
for
it.
That. Yeah. See you there.
So that, Michael, was basically your answer from your perspective.
He doesn't deal with it. He doesn't deal with it.
You don't have this problem. So I just,
for people who don't understand short-term capital gains, if you don't hold something for a year, basically any stock, whatever asset you don't own for a year, if you sell it under a year, 364 days, you're screwed. 366, you're fine. You pay the same rate as your taxes. So if your tax rate is 40%, basically any day trade I take, I pay 40% taxes on. And not only that,
you can't cover the losses, right?
Correct. Well, you can write off losses, but
Belgium didn't have that,
and what's worse is if you're trading altcoins, when you buy the altcoin, you have a taxable transaction for selling Bitcoin. And when you come back into Bitcoin, you have a taxable transaction for selling the altcoin. So you're paying, for me, it's basically 40% taxes on both of those transactions. And sometimes there can be a loss in dollars, but a gain in Bitcoin. So you end up, it's a disaster. It's a complete disaster. That's the answer.
So we could say that basically being a trader in the Netherlands is from the point of view of taxation, like a much better environment than in the US.
The United States is the worst place to trade crypto.
It's just for us, it's a paradise. I mean, if you make 200 grand in a year with trading, and that's just an increase of your wealth, you're paying like 3,000 euros taxes on it. And if you lose money, of course you have to pay something as well. But if I make 200 grand and I have to pay 3K, then I'm more than happy to pay that.
If you make 200 grand in the United States, you'll pay 80 on it. Not quite, but 70, 75.
Yeah.
Mm-hmm.
There are write-offs. I mean, that, at the most basic level, but in theory, yeah.
Okay, let's move on to the last part regarding this topic of correlation. I want to just briefly explore the US Treasury yields and the correlation with Bitcoin. So in the latest few days, the US Treasury yields have shown some sign of life. They have been going up, while in the past few months and weeks, they were very low. So coincidentally, when the US Treasury yields went up, both gold and Bitcoin experienced a correction. So do you see a correlation here? And do you see a further rise of these yields as a bearish sign for Bitcoin?
No, I don't care at all. I don't care at all. And that's so temporary. And also, like, the same people who are trading bonds or care about bonds don't give a shit about Bitcoin. I think it's just completely irrelevant. Also, like, treasuries are dead just because they went up a little bit. I mean, we're talking about, what are they at now? A 10-year yield is 0.71. I mean, at every point in the last 4 months before that, this would have been historically low at levels that people couldn't even conceive of. So it's like, yeah, you're kicking a dead animal and it has a shock and you say it's back alive and it's affecting things. No, it's just a dead animal that moved a little bit, right? And that's what treasuries still are right now.
In that case, the metaphor of the 90-year-old man, maybe it's more fitting in this image.
The 90-year-old man might be 10-year yields, certainly, for now.
Michael, do you have any specific view on this issue regarding yields?
Well, to me, the yield is one of the, I'd say, only variable that's hard to manipulate for the Fed itself, as it's the government bonds. Yeah, of course, they can continue buying this stuff.
Buying them, yeah.
Yeah, of course they can. But for instance, the level of gold right now is hitting an all-time high, while the yield is essentially at a very low point, which means that the trust in the dollar is at an all-time high, given the price or the yield level right now. That's essentially what it's saying. The previous all-time high of gold was in 1980, when the yield was 14% and when nobody trusted the dollar. So you can define some structure out of it that right now the yield is just too low. I mean, if you can get a mortgage for like 1.5%, that's just a joke. That's not how a system works. If a country like Greece is completely bankrupt since 2008 and they can borrow money for like 1.5% a year, which is lower than some other countries which are completely fine, that's just showing how wrong this and broken the system is indeed. So it's more likely that this yield is going to go up in the next years than down. And for instance, like in 2000 and 2008, you also saw that the yield was going down while the crisis started to occur, which also meant that during these years, in the first part, gold was going down. So in 2000, gold went down with 40% as well because of the crisis. In 2008 as well. If we want to see a shift, and if the yield is going to crawl up in the next years, I think it's only going to fuel the bull run of Bitcoin and gold and silver itself. As essentially we come down to the same conclusion, the trust in the dollar is going down by it.
Mm-hmm.
That's my view.
All right. I think that was very informative, and we can switch to the next topic, which is actually what our audience is also very much interested, because I see a lot of questions regarding it.
DeFi.
Altcoins.
Yes.
So touching upon one tweet that I saw on Scott's Twitter today or yesterday, you are enjoying alt season very much. So are we in alt seasons, and why, according to you?
We've been in alt season for so long. I think that we've seen the drop in Bitcoin dominance. Bitcoin dominance might be strange, because I never really believed in charting dominance, but the chart is incredibly clean. I mean, the way that it's played levels, breaks support, pumps back up, tested as resistance, and falls. But I mean, clearly Bitcoin dominance has dropped while the price of Bitcoin has risen, which is like a wet dream for altcoin traders. I mean, I don't think there's any argument when you see coins doing 1,000% gains a day. You see this absolute DeFi craze that's very reminiscent of things we've seen in the past, that it's alt season. And to me, honestly, I think it could just be starting. I don't want to get people FOMOing or anything. Anything can happen. But I mean, like Michael and I both said, I mean, we've basically seen this long ahead. We've been buying these bags. You know what I mean? Like we've been loading up for ages. Anybody who follows either of us knows that we've had no fear of trading alts for a very, very long time here. And, it's now everybody's all of a sudden finally admitting it's alt season when traders who have been aggressive have 5, 6, 7x their portfolios in the last 6 months. So.
Michael, you also agree that we are in alt seasons now?
Yeah, I think it's the start of a new cycle. So what we saw is that since the halving, all of a sudden the confidence in crypto increased, and that was sort of the trigger for altcoins to start flying. And people were saying that we're not in an alt season should just put up the chart of Chainlink or Band Protocol. I mean, they are making very large all-time highs, which I've not seen since like 2016, 2017. So yeah, we are in alt season and everything is just starting up and the rest of the coins are just following, I guess. As long as it's listed.
That's right.
Okay.
Like you said, it's the dartboard. Close your eyes, hit buy and wait.
But Scott, you said that most of the positions you are enjoying right now were started already months ago when people were not, I mean, in the press as well, there was not such a big rumor regarding alt season. So are people still in time to take profit and take advantage of it? Or they should have got in when you got in at the time?
No, I think that there's plenty of time. Like you said, I mean, if this all goes how it looks like it's going to go, I mean, you still look at the chart. The thing is, like, you know, you always see the chart that's like, well, if you lose 50%, you have to make 100% to get back to your entry, right? So there's this disproportionate gain required for a loss. So yeah, we see like these crazy 2, 3 times, 4 times pumps. But if you zoom out to a monthly chart, we're like still 90-something% down from those highs. Well, what if we return to those highs? I'm not saying that we will, but even if we go halfway back up, you're talking about 10, 11, 12, 13 time gains here, even just to get like a 50% retrace, you know? So I think that, I think there's still plenty of time. And I think a lot of coins have not cycled just because, you know, you see the DeFi coin go, or you see the Oracle coins go, as he said. The other ones will follow, probably. Listen, there may be things that just like nobody's interested in and they don't come back. But largely, you know, most of these things are going to see movement.
But like, it's also like market psychology to the basics. I mean, once everything starts to accumulate and just go sideways for a year, everybody's shouting, yeah, it goes down even more because they've experienced a downward trending market for the past 2 years. And then when something starts to break out, all of a sudden people want to buy the top because they see green candles and FOMO and social media engagement going around. So I think it's just regarding the stupidity of 90% of the people, which seemingly don't have any interest in any altcoin when it's going sideways. But when something starts to show a green dildo, they get interest in it and they want to get in as fast as they can. It's probably also the same what you see on the stock markets right now. Evaluations are crazy, but people still want to buy these Amazon stocks and Apple stocks because, yeah, it's going up. It can go up even more. But they should actually be looking into coins that are just showing the exact same figures as some coins have been doing a few months ago. They're just lagging behind. And that can just kick you off with like 2, 3, 4, 5x. And then you're getting...
But there are people who will lose money in alt season. You know, there's a lot of people who lost it in 2017. It's the people who don't have patience. You jump out of one that hasn't pumped into one that has pumped. That one goes down. You sell at a loss. You repeat that cycle. So it just requires, you really have to be patient.
Well, the communities are getting larger for the altcoins, which is also great for them.
So you think that patience? You think that patience is the main issue here because you can be patient as much as you want, picking a coin which is basically maybe an unsuccessful one. And you can wait forever and to see it pumping, but it will never pump. So I guess it's also about like
but you should never be all in on something either, right? I mean, you should be diversified and whatever. I mean, being all in on one altcoin is a poor investing and trading strategy. So yes, that's what I'm saying. People could still lose, but if you have a nice position that's well sized in a number of coins that are all based on larger time frames, you should see movement. You know, some people won't, but.
Can I add something? I mean,
yeah, please.
I think it's also coming down to patience in itself, because one of the rookie mistakes I made in 2017, it was that I was holding a bag and then the bag did not move at all. And when I saw something moving around, I jumped over to the one that was moving around. And when I jumped over, the coin that I initially held started to rally. So what people should understand is that if you hold a bag and the strategy or the plan is just safe and sound for itself, you should not actually be watching any other coin because it should not care for you. It's all about the position you hold, and the positions you hold is going to buy you the groceries you want or the Lambo you want. The other positions don't care. They don't exist.
Yeah, that's right. The worst mentality a trader can ever have is the thinking about the asset that they should have been in when they were already in one, because you're never, I mean, 9,999 times out of 10,000, you are not in the single asset that pumped the biggest that day in any market, right? If you make 10% on a stock, but Tesla did a 5x, that doesn't mean that you had a bad trade. You had a great trade and you made 10%. So forget about Tesla.
It's all about your own portfolio. I mean,
yeah,
the rest doesn't.
Such an important point you made.
Yeah, I guess a very important point is being content with your good results without actually, you're gonna see something better and something pumping harder, as you just said.
So always
important. So
it's also just go ahead.
I just wanted to mention one of the most successful currently altcoins which are performing very well. So Chainlink has taken over Bitcoin Cash as the fifth largest cryptocurrency in terms of market capitalization. So I guess you have been also talking about it a lot on your Twitter, and you are trading it as well, I am pretty sure. What is the reason of Chainlink's outstanding performance, Michael, according to you?
I've traded Chainlink once and I got stopped out, so I'm kind of emotional about it. No, but I think it's also coming down to Bitcoin Cash just being a shitcoin and Link just really providing a potential solution to the markets, being an oracle. I think that's just two portions of the answer. I mean, there's many projects in the top 10 that's just full of shit, and now there are finally coins and projects getting into the top 10 that deserve the spot to be there. The valuations of like Bitcoin Cash, Bitcoin SV, Tron are just way too high compared to the projects that are now coming up.
Yeah,
so it's just a shuffle.
It's the perfect storm. I mean, it's literally like the perfect altcoin because, the charts never looked bad. It's had like dips, obviously, but if you zoom out to a weekly chart, it was in an ascending channel literally since the day that it entered the market, and then it broke above that channel. I did a whole live stream on that actually at some point with CoinMarketCap, just talking about how bullish the Link chart was. It's definitely always been a dip buying asset. You have a extremely passionate community, which is really important because
Link Marines.
Yeah, and they hate me because I posted a chart not that long ago that said I wanted to buy it lower. So but that's actually, I mean, I get it. They're so passionate about that. Even when I said I want to buy it, just not quite here, they were angry because I thought it could possibly go down. But that is the perfect recipe for a coin to go up. If you want an indicator, and see what the Link Marines are doing and know that this is something you need to buy and ride. And then even maybe most importantly, it's fundamentally strong. It's got a great team. They do constant partnerships, and it's something that almost every project they need oracles, to verify information. So it's just an essential part of almost everything that everyone is doing everywhere in crypto. And then you add in DeFi craze, and it's the oracle for all this DeFi. I mean, it's like a perfect asset for this market.
So that's interesting. So you're basically saying that the top 5 coins by market capitalization that has been all for a while, the top 5, are going to lose their position very soon in favor of DeFi
Probably.
coins.
I don't know necessarily DeFi coins, but think of it this way: Link didn't go through a 2017 bag holders. Anyone who bought Link as an investment, not anyone who traded it, because Michael, we've both had experiences where we got stuffed out. If you ever bought Link, you're up, right? There's no such thing as a bag holder who's underwater on Link. It's at its all-time highs, right? Talk to someone who's been holding XRP for 3 or 4 years, and you're worried, there's always somebody looking to sell these coins that have been underwater for that long. They'll take any 10% pump to sell their huge bag. These new coins do not have that. These are at an all-time high. There's literally nobody underwater that's trying to get out of their position. It's incredible. They're just no bag holders.
So you would also agree with Michael when he defined Bitcoin Cash and Tron like shitcoins?
Bitcoin Cash is a disgrace.
Yes,
its existence is insulting, but who cares? Whatever. It's fine. I mean, so are a lot of them. But I don't think TRX is that bad. I just think that when you've had a bubble as big as that did, going from 20 sats to 2,000 sats, there are people who bought that thing at 2,000 sats that still have bags of TRX. Right.
And
So
it's
just
also-
the economics of it is there's just people who are going to be looking to sell anytime that they can get a gain, which to some degree depresses price. But I mean, TRX it's very good at doing what it does. It's fast. I mean, it's, you know, faster than Ethereum. It's not a bad project.
No, but like for instance, these old projects, they are going to have a really hard time to get to that all-time high, given that they have these bag holders. So when they see clear resistance coming up, they will be pushing that sell button to get out break even. While Chainlink or like Tezos or Bond Protocol, Bond Protocol basically starts to move because Link is an oracle and doing really well. So all the other oracles will do well as well.
Right.
But Tezos and Chainlink and the new projects coming up right now don't really have these back holders. So there is no sell pressure until the price is getting to a ridiculous level that the majority of the whales start to cash out and then the whole market starts to shift. That's just how a cycle works. And I think the new coins have so much more space to run than the old ones, given this information.
Mm-hmm. So now I would like to go more in deep into this matter of DeFi. So as you mentioned, we are seeing a DeFi craze this year. We are seeing like a growth which is explosive. If I'm not mistaken, in the last just 2 months, the overall market cap for DeFi increased many times.
Billions,
So many people are concerned that this could be comparable to the ICO bubble that we saw in 2018, 19. So do you agree with this comparison? And if so, what is the best approach to avoid getting burned while not missing this huge opportunity? So we saw that a lot of people bought into this ICO craze. Many people made a lot of money, but many more actually got completely broke by this. So what's the best approach to this great DeFi period, Scott?
Well, I think there are things that will benefit no matter what. We just talked about them, like Link, right? I mean, Link is a tool that is used in DeFi, so it will always benefit regardless of which project. Things like that are, you know, so I think that those will benefit. I mean, yield farming, all this stuff is a bit above my head. Funny, I actually took my first like kind of shot at it today and had a terrible experience. And I would say that I'm a poor farmer. You know, and I think it's complicated. I think that there will be people who do exceptionally well and make generational wealth on this DeFi craze. But like, I don't know that it's like the ICO bubble in structure or anything like that. But I do think that there will be a lot of people who get caught holding very large bags who don't really understand what they're doing, like anything like this. You know, I think a lot of these assets are built to, you know, you make your gain, you sell it, you know, like watching something go up 30x and not selling because you think it might go up 100x and then it ends up not existing in 6 months it's a real possibility, I think, with a lot of this stuff. Some of it, I mean, the DeFi itself is incredible. I think it could be the future of, you know, finance and lending to some degree, but that doesn't mean that like coins that are named after, you know, food groups are going to do well.
Right, but then you are basically comparing it with the ICO.
I think it's similar. No, I think that there will be that some will succeed and most will fail, and people will get caught holding the bag. That's just kind of what happens.
Mm-hmm. Michael, do you also have a similar view, or what's your view on this? How would you approach this huge opportunity without risking too much to get burned?
Well, I think DeFi itself, what Scott just said, it's DeFi could be, if you're reading and understanding what it is, it could be really big. It could be the future. It could be a new system. That's what we discussed in the earlier part of this live stream. It could be something. However, if something is doing really well, for instance, Link is doing well, everything that's also an Oracle starts to go up as well because it got the word Oracle in its white paper. So how you can defend and approach this is just through having discipline and risk management, which means that you are not going to allocate 100% into yield farming or so of your portfolio. I think it's just the bottom line of everything. So if you see something new, you want to risk it, use a few percentage of your portfolio maximum. And if you make 100x on it, fine. Put it in Bitcoin, go to the next one, still stick to that plan. And I think that's just basically how you should approach these things. And I know people would just go all in on every new DeFi project that's coming up. And these are the people that will be burned at some point.
Mm-hmm.
So yeah.
So would you? It's interesting because we have a related topic, which is basically the possibility of market manipulation. So as far as I know, the DeFi tokens, according to some research, are hugely concentrated in the hands of a few addresses. So they are very unevenly distributed. So that's also because most DeFi projects work with the governance tokens. So these tokens are giving like huge power to the people that holds those tokens. They can have like a voting power on the future of the protocol whatsoever. So there is a very uneven distribution of these tokens. And so that makes apparently the price and the future of these projects quite unstable because they're relying on a few individuals.
Have you ever looked at the distribution of wealth in the world?
I just wanted to say that one as well. Yeah, man. I was just sitting here.
I mean, that's how wealth is distributed in every project situation everywhere in the world. You know.
Also regarding Bitcoin, I mean, 90% of the tokens are in hands of like a few wallets, or like 50% of the tokens. So it's the same.
But wait, I mean, like.
But you're saying because of the voting, there's no voting power on Bitcoin or whatever. You're saying because they can control the future based on voting. Yeah, I mean, it's you know, but ICOs, they sold a certain percent, but the guy who started the company had most of the coins and made the decisions, right? If you're talking about an ICO comparison.
But also, I'm talking also about price manipulation, right? So it's more difficult to manipulate those. Probably it's more easy to manipulate those DeFi coins in terms of price than manipulating the oil market.
Yes.
But it's also easier to just manipulate your altcoin through price movements as it just fell at like 20 million than manipulating Bitcoin. I mean, it's the same concept.
Yeah. You have to know what you're investing in. I mean, you know, I don't think it's big. It's the low cap and the tiny market cap and the small amount of money it takes to move price, as he just touched on. That's really the issue, not who's voting on what happens, you know.
And the larger they become, the harder it will become to manipulate them as well. At some point, you hope, unless you are called Jerome Powell and you are in charge of the Fed, then you can manipulate everything. But essentially, over time, when something like the DeFi projects become larger, this inequality just divides and it becomes less significant, and then it should become a system.
Mm-hmm. All right. So to wrap up the discussion, I would like you to select one altcoin that you feel particularly excited about right now, and just show us a little bit of price analysis regarding that specific coin that you feel excited about. So you go first, Michael.
Yes, I'll just get it up 1 second.
The charts have changed a lot since I decided.
Did it drop down or no? Let's see, share screen. There you go. I just wanted to point out, Komodo is one of my favorites, also because of the song Moro Piccolo Komodo. For the people who know that one, it's just an incredible trance song. But that's some off-topic stuff. What I just wanted to point out is that if you want to look for altcoins that are looking really well, I think you want to see the structure you see here, in which we are just using an accumulation range for a year. And now we're trying to break above these 100-day and 200-day MAs. This retest you want to get, as then it starts to break out heavily. And I think Komodo is going to be the one that's going to follow in the next few months. And then once it breaks these accumulation ranges, it can easily just break through the next range, which is a 3x from here. So I'm not going to show any coin that's moving a lot already. You can spot like 200 of these altcoins here that have the exact same setup but are just lagging behind. And I think the people should be focused on searching them and accumulating them rather than buying Chainlink right now. So that's just what I wanted to share.
Awesome. I like it. Scott?
I'm searching through a couple here. Yeah, here. Well, this actually is kind of an example. Let me get the share screen, because this is not one that I would have chosen actually. But I was going to do WRX and it just went WazirX and it went completely nuts. So
it's essentially the same concept as Komodo.
Yeah, I mean, this is, so you can see today on Wazir X, I had this bull div, this long-term here, this is a huge area, and one day all the way up. So that's what I was going to look at, but gone. Enigma, I've been holding, since we're talking about, coins and having patience. I was buying this basically in May and June. Smaller position, larger stops, knowing that I was looking at a weekly chart here to accumulate. You can see what's happening this week, right? So I've waited probably 8 or 9 weeks for this to finally go. Sorry, my mouse is not doing well. Go in on the daily. You can see, it's sort of similar to what he's saying. You have all this accumulation down here. You have this sort of finding a base. And then, all of a sudden, volume comes in. And now, I would say that if you're trading this right now, I just want to see it hold this level at, 40.74. There's the retest. But if it comes down, just keep going level to level and on the way up. But this is a long-term downtrend on the weekly chart that's been, broken bullishly. And there's so many of them. There's so many that look like this. So yes, it's a little different than what he's saying, but I mean, this is the entire history of the coin, right? It's from here to here. And if you take it from a fib, go ahead. Sorry.
I think it's on a smaller scale. It's actually the same as many of these other altcoins. This one has shown a downtrend for a long time, and WRX even shorter time frame went sideways, and now you can see these higher highs, higher lows popping up, in which you know that it's just bull territory. You can just buy every dip. Just every support resistance flip is interesting to buy again, and then you look for a new higher high. So. It's not. It's if you want to trade a market, this is the one you want.
Yeah,
really easy.
You want to just be trading, accumulating altcoins. That's it.
Yeah,
guys,
that's right.
I just want to quickly mention one.
Go ahead.
One breaking news. Apparently, YAM, which is a DeFi token, the market cap of YAM fell from 60 million to 0 in 35 minutes. Right now, just now. It was a 2-day-old DeFi project who has seen its market cap evaporate in under an hour as a desperate last-minute attempt to fix a bug. So I guess this is one of those cases where something goes wrong and the project doesn't.
Right. They also have rebasing, right? So some of that is built in, the huge drop. So when you chart some of these coins, they look ridiculous, but it's actually not as bad as they are. But what you're talking about is scary.
That's why risk management is so important when investing in these startups. But I'm happy for the holders that they didn't have to experience a 2-year bear market. They just vanished in 2 days, which is a fast, very short-term pain. But after that, they just move on.
So I guess the good suggestion would be at least wait after at least 2 days after a DeFi project gets launched.
Before and the issue here, obviously, like Uniswap and these platforms are really, really cool, but you don't have a stop loss, right? So I have to feel listen, I have not dug that deeply into them. I've only played around, but if you're in that and it goes down that fast, there was literally probably no way to exit unless you happened to be watching it and clicked a button. But there was no, fail safe, no stop loss, nothing got you out of that position at a 10% loss. So yeah, like you said, I mean, it's really cool. It's fun, but you have to play with tiny, tiny, tiny position size because you can't manage your risk in the same way that you can on another exchange.
Okay, cool. So I think that we can wrap here the discussion. It was very cool to talk to you, Scott and Michael. Thanks for being with us.
Thank you so much.
And thanks to our audience for participating. Actually, the questions were very interesting and very much fitting the discussion. So if you want to, don't miss our next Crypto Market Live, which will be in 1 week, the same time, same day of the week. And don't forget to subscribe to our channel. I'm Giovanni, your host. See you next time.